Say, let's be honest, the stock market has been a mess lately. One minute it's tanking and then the next minute it's going back up. The headlines are wild, the economy feels shaky, and people are wondering, should I still be investing? Is this the right time to invest? Is investing still safe at this time? And here's the truth, my own portfolio was red for a couple days. I kept seeing my money plummet. It just kept going downwards. But I wasn't panicked. I wasn't worried in any way. I get that feeling when you check your app and all you're seeing is like minus or red everywhere. But the truth is, I'm not worried. Okay? I haven't sold anything. And why is that? Because I have a long-term approach to investing. When I started or decided to invest, I knew I had at least a 10-year horizon. So if the stock market hasn't been going up and down, would I actually have withdrawn my money? I wouldn't have. So my point is, because I have a long-term approach to investing, I'm not really worried about what's happening in the market right now, because whether it was going up or whether it was going down, I had no plans of taking out my money this year. I have no plans of taking out my money next year. And that's why I'm not worried, because I know the strategy and the approach that I have to invest in. So in today's video, I'm going to break down everything in practical steps, okay? The first thing, I'm going to explain what's happening in today's market. Why is the stock market going up and down? I'm going to also explain what not to do during a market downturn, which is what we're currently seeing. I'm also going to answer the question of whether it's the right time to start investing now or to continue investing. And lastly, I'm going to just go over briefly on how to invest confidently, like a few things to just note. So without further delay, let's get right into it. So first thing is, what exactly is going on in the market right now? If you're like me, if you've been keeping up with the news headlines, you've probably heard about tariffs here and there. You probably also hear people throw around, you hear words like global trade war thrown around a lot, but what exactly does this mean? So, what is a tariff? Well, tariffs are basically a form of taxes that one country imposes on goods imported from another country. In this case, the country that has been making a lot of tariff changes is the USA under the Trump administration. They're imposing more and more taxes on goods. So, for example, if the UK imports cars from the USA and then the USA increases the tariffs for the UK, that means importing cars into the UK from the USA will become more expensive because the taxes have gone up. So if the taxes are going up, it means the businesses that are doing this importation, they're going to spend more money, which means prices are going to go up and then profits are going to go down. I hope you understand that. The point is, the increase in tariffs is not really good for businesses because it's just going to keep making prices increase and it'll reduce profits for businesses that are involved in importation in the long run. So, for example, the US increasing tariffs on China means that any goods that are imported from China pay more in taxes. That's why, there's a lot of back and forth between the USA and other countries with the increasing taxes. And this is what is called a trade war. One country increases the tariffs for another country, and then the other country retaliates and increases the tariffs as well. This is what we've been seeing between the USA and China. So the US says, oh, we're increasing your tariffs to, let's say, 45%. And then China is like, okay, we're going to increase any imports from the US as well. We're going to increase tariffs to 70%, and then the USA increases again, and then China increases again. So you can see that with these changes, there's a bit of economic instability that's coming with that, because honestly, nobody really knows what's happening right now. There's a whole lot of confusion everywhere. Everybody's just moving on a whim. So that's what the global trade war technically implies, right? Where one country retaliates to another country. The US has been the one spearheading this, where they've imposed a lot of tariff increases to so many countries in Africa, and then now you know they've even spread it out further. So this back and forth with tariffs and taxes basically makes goods more expensive. And not just that, it creates uncertainty for companies, for businesses, even for economics worldwide. And if there's something that the stock market hates, it's uncertainty. The prices of stocks and shares, everything is going up, is going down just because of what's happening on the wider economic scale. Let me know if that makes sense to you. Put a comment down below. Now, let's talk about what should you be doing right now with everything that is happening in the economy. And if you're an investor or you're looking to invest, what should you do with your money right now? So the very first thing you should not do is do not panic sell. But before I proceed, I want to say this is not personal finance advice. This is me providing education and information so you can then make an informed decision based on the information I'm sharing. So please consult an investment portfolio manager for expert advice. When you sell your stocks and shares now, you're selling it at a loss. So because everything is red, everything has gone down, it means you're selling these stocks for a lesser amount than you probably bought it. So it's not the best idea to panic sell at this point. The truth is, when you sell right now, you're going to be locking in your losses. And generally, over time, the stock market has been known to bounce back. I mean, it's very hard to believe this, but this is not the first time that the stock market has taken a very bad turn, and it eventually would recover. And that's why you're told to have a long-term strategy when it comes to investing. Even the major downturn when we had COVID, the stock market took a big hit, all right? But it eventually recovered. So this is not the first. And if you look at history over time, it's not the first, not second time. But I can understand that if you're new to investing, just like I am as well, there can be that fear, all right? Because you're not reading out any market downturns. There could be that fear of, oh my God, I'm going to lose all my money. But it's probably not the best time to panic sell, if you get my point. The second thing not to do is to not blindly buy the dip without a plan. Let me explain what I mean. There are a lot of people that are like, oh, the stock market is on sale now, so just buy the stocks now that it's cheap. Buy as many as you can. That's not necessarily a good strategy, because just because the stocks are cheap does not mean it is valuable stocks. Okay? So rather than trying to, buy stocks individually, I think a better approach here would just be to spread your money across well-diversified ETFs rather than trying to actually pinpoint stocks and buy them now just because they're on sale, if that makes sense. And also, some companies right now, they are down not necessarily because of the stock market dip, but just because they've lost long-term profitability. Okay, so it's not necessarily because of the market that they're actually down. It's just because they've lost profitability. But you wouldn't know that because everything is red right now. So if you're buying, you're feeling like you're buying at a sale. So not every stock right now is still worth buying, even though it is cheaper. The broad ETFs you can consider are like the S&P 500, the FTSE 100, NASDAQ 100. The point is, just rather than trying to pick stocks now, you can still invest, but try to ensure it's across diversified ETFs. I hope you get my points. And the reason why ETFs are good is that ETFs give you a wider exposure, right? If one company fails, it doesn't necessarily affect your entire portfolio. You've invested across several companies. Let's go into the dose. What should you do right now with everything that is happening? The very first thing is that it is okay not to do anything. That is me. That's the category I'm in. I'm not doing anything. I'm not changing my strategy. The plan I have to invest every single month, I'm still doing that. I'm still putting the same amount every month. And also, I'm hoping that dollar cost averaging is going to work out in my favor. So, different prices would apply across different period. However, if it's high, I'm buying. If it's low, I'm buying. I don't really care, honestly. The point is, I'm being consistent every month. And you know what? It's okay not to do anything sometimes. It's okay to even say, I just want to take a pause. Like, you're not going to sell, you're not going to buy. It's totally fine to do nothing as well, because sometimes the smartest move is just to pause and observe before reacting. The second thing you want to do right now is to build your emergency fund. I mean, before you even started investing, you should already have an emergency fund. But if your emergency fund is not built up to the level that it should be, the current economic climate is a clear indication that you need to have an emergency fund. So, for example, if your goal was $12,000 and currently your emergency fund is at, let's say, $7,000, this is a good time to actually put more energy into building your emergency fund so you have a bigger safety net, even as you are investing. Do you get my point? So that's something you can and should do at this point, because having a buffer like that is very good. So if anything happens to your investment, you still have like your emergency fund to fall back on. Now, the third thing to do is to diversify properly. I mean, I've said this here before on this channel. Diversification is very important. Whether you decide to diversify by region, so don't put all your eggs in one basket. All your investment cannot just be in the S&P 500, because those are basically US companies. You have to be diversified by region, where you have some stocks in Asia. So, maybe you have some stocks in Europe, you have some in America, you have some in Africa even, right? Or you diversify by industry, where you're not investing everything into tech. I understand that tech tends to do well, but know that there are other industries as well. There's pharmaceuticals, there's waste management, there's energy renewals and stuff. So the point is, ensure your portfolio is diversified. That's what you should do now. So now let's go into the question I've been getting a lot. Is this a good time to start investing? Or is this a good time to still invest? The best time to invest isn't about the stock market, to be honest. It's about you. Are you ready to invest? Is this a good time for you to invest? So I'm just going to go through a couple questions that you need to answer confidently to know whether you should invest or continue investing now. The very first thing is, do you have an emergency fund? I already explained why you need to have this. So do you have an emergency fund? You need to answer that. The second thing is, so you have high interest debt, because if you have high interest debt, for example, a credit card debt, the interest rate on that is most likely going to be higher than what you'll get with investing. So it's better for you to clear that off and put your energy there first, or as much as you can, and then maybe invest a little. The next question is, are you investing with a long-term approach or a long-term mindset, at least 5 to 10 years? If you cannot see yourself investing for at least 5 years, my dear, probably investing is not for you. Do you get my point? You need to have a long-term horizon. The next question you need to answer is, can you commit to investing consistently? So regardless of what's happening in the market, can you commit to putting a certain amount every month into investing? The next question you need to ask is, do you know what account is best for your goals? For example, ISA accounts, stocks and shares ISAs. Do you know if it's a GIA you should be using, or should you be investing mostly through your pensions? The next question is, do you understand what you're investing in? As a rule of thumb, if you don't understand what it is, don't put your money in it until you understand it. Don't put money in it. So do you understand it? And then the next question is, can you handle the market dipping without panicking? You need to be honest with yourself about this. If you've not started investing, can you handle the market dip without panicking? Is this something you can handle? Another thing is, do you know your risk tolerance? So some of us are high risk, some of us are low risk, and some are right in the middle. For me, I'm high risk. I'm honestly happy with risk, and I'm okay to risk it. Like, I really like high risk, high reward, but then maybe you're low risk, and that's totally fine. You really need to know your risk appetite so you can tailor your portfolio to match that, and it also affects how aggressively you invest. It could mean you don't invest a lot of money, or maybe you're just moderate with the amount you're putting in every month. But yeah, it's super important to understand your risk tolerance. And then the next question you need to answer for yourself is, do I have a strong why? Okay, do you know your why, and is your why strong enough? Now that the market is going up and down, one of the biggest things that's honestly keeping me calm and sane is my why. I know why I started investing. I'm investing to build wealth, okay? I want to get to the point where I can retire early and live off my investments, where I'm getting like monthly payments from my investments and I can just live off of that. So I know what the goal is. So I'm not panicking because it's not even close to the end point of my goal yet. I mean, I'm still far from where I want to be. So you really need to have a very strong why, because it's going to keep you grounded when things like this are happening. There we have it. That's everything in this video. And just a bit of a final thought is that since 2020, we've lived through a global pandemic, sky high inflation. Okay, inflation is at its all-time high. A war in Europe, the war between Russia and Ukraine, and now another round of political and market shocks. And yet the market is still there, and yet my portfolio is still growing, right? Even though my portfolio has dipped, I still have some funds that have actually gone up a bit, and that's because I'm diversified. The point is, the stock market is still there regardless of what has happened over the years. It's still there, and it's still going to remain there. It's not about timing the market. There's never a best time to, just start investing. In fact, the best time was yesterday. It's about starting when you're ready and when you meet all the criteria to start investing. Do you get me? So to answer the question, should you be investing? What I would say is, if your foundation is strong enough and you have a long-term horizon, then honestly, I don't see why you shouldn't be investing at this point. I think you should still keep investing if you can answer those questions I shared truthfully and you have a long-term approach to investing. The markets go up, they go down, they go sideways. All right, but if you're consistent and intentional, you'll come out ahead eventually. So let me know in the comments. Are you investing right now? If you've not started investing, are you still scared to invest? Where are you at right now with your investing journey? Put it down in the comments below. And if you found this video helpful, please do not forget to give this video a thumbs up, subscribe, and share so that more people can see it. And thank you so much for watching, guys. Till next time, bye-bye.